Do it. Okay, 5, 4, 3, 2, 1. Wait, what's this called? Big announcement coming soon? Oh, yeah.
And
5,
welcome
4, 3,
back to
2,
the
1.
Big Announcement Coming Soon podcast. I'm here today with David. Been off for a couple weeks and a lot has happened. David, how are you doing before we jump into some news about real estate?
Yeah, it's doing well. Yeah, it's pretty good times. ETFs went off well. So it's good times to be in crypto, really.
You said the ETFs went off well. As somebody holding, I'm going to put a note. What the hell? Went well. I'm down. Well, from 2 weeks ago. And we'll talk about that because you've got a trade hypothesis and more about what's it like to go through a trade that's longer than a couple hours. And we'll get there, but Evergrande's done in China, the big real estate developer. That's been going on for maybe 6 months where they've been restructuring debt, um, getting help from the Chinese government. It looks like it's taking out Hong Kong sector. That stock market's down. New York Community Bank is down 30%. That was just this morning here in the US, and it's been only a couple hours. But a lot of this isn't the first time we've talked about this. We had the Silvergate stuff. We've had Evergrande going bust before in these Chinese ghost cities where they develop. They just don't fill them and sell them. And we kind of they print some money. We're back, right? Is this finally it? Is this the real last time we talked about these things blowing up, or the real time they blow up?
Yeah, that's a huge one. Yeah, hard to say, right? Like, I mean, it's kind of like if you go against the Japanese market in the past, it was called the Widowmaker trade. Going against the Chinese market often has been called that too, or not that, but you always get shamed. But this time, I don't know. Like everyone, all the American companies pulled all their money out. Foreign investment has gone to zero basically ahead of this, because the problem is not so much that they built the houses. The problem is they didn't build some of them, a lot of them actually. And so it's kind of like a pyramid situation where they would use inflows from new houses to start building new developments, and so you need new to complete them.
But you're
And so
saying
as these
development 1 and 2 were real, development 3 was never built. But
yeah,
did they sell the properties on 3 before, as they didn't build them?
Definitely. Yeah, exactly. And so you got a whole bunch of people who have paid a bunch of money, often on like kind of build to you. Some of the ways it would work is you just pay. You say, okay, I own this property in 5 years. I'll buy it at this price now, and I'll pay you over 5 years. And 5 years from now, it'll be completed. It's just a pit in the ground right now, or it hasn't even been started to convert. And then if you buy it in year 4, it costs more. If you buy it in year 3, it costs more. And the closer you get to actual build date, it costs more. And so a lot of people would jump in early on and start paying the lower price for this future house that they would get. But those houses never were built. They weren't built, weren't started. So you have a lot of people who don't have those houses. And also you have these ghost cities where there's lots of houses been built where people don't actually need them. And so on paper, you have too many houses, but actually
it's location. The ghost cities, a lot of it is to kind of relieve some of the mega city population in China. So you build another 5 million person city nearby, but people live in cities because they want to be close to the action. You don't want to move to the new suburb.
It's also needing to put money places like. So like you would see in Philippines, for example, where I used to live, lots of apartments you would see that in this kind of wealthy area were just empty, right? And they were just owned by Chinese individuals or companies because they needed a place to invest money. And they just bought these apartments in these same kind of situation as investments to continue to invest because people kept buying property. And so when that reversed, it was basically they don't have the money to pay, and now they're just going bankrupt, and all these underwater developers who can't get paid by them for the unfinished apartments are in the shit. So anyway, they were allowed to go bankrupt, or sorry, they went bankrupt and they went into receivership. So to
And
try
this
and
is sorry, just to focus. This is Evergrande finally went bankrupt yesterday or this past couple days, where they'd been saved from this problem wasn't new. They've been kind of saved and had their debt restructured and stuff over time before, and this
yeah,
is
they were
the
trying to
end.
organize with creditors, yeah, that it would work out, but then it was basically unworkoutable, and so they let it liquidate. Um, Kind of in crypto terms, kind of like what Binance looked at the books and said, we can't take on FTX. This is a crazy pile of waste. And so now the Chinese government basically has a whole lot of Chinese population who paid for houses that they don't get. So what are they going to do? They I don't know, but like in theory, they would bail them out, or at least like buy back the loan, something like this. Um, but to do that, you need to print money, all sorts of things. And so, yeah, they've been changing their money rules and loosening it up. Anyway, long story short, where this kind of hits back to crypto is, like liquidity is what drives crypto prices higher. America, in theory, is low liquidity because of a lot of reasons, higher interest rates, etc. But China, they're injecting liquidity. And so you could see that liquidity moving to Bitcoin, fleeing essentially to Bitcoin, because essentially it used to be in property or investing in like hot real estate and hot Chinese stocks and stuff, which are all going down. Where does money go? Well, Bitcoin's going up at the moment. Maybe put money there. So that could be the play that happens.
And that's
But at
simply a
the same
liquidity
time,
issue. Bitcoin is the Philippine housing market for them. Your money, you have Chinese stocks, you have houses in China. What do you do now? You can buy art, you can buy wine, you can invest in foreign property, right? And it seems like
how
the
do
thing
you?
that's there and is liquid out of all of those is Bitcoin because they're stuck in Chinese property or stuck in apartments in Manila. They're stuck with a piece of art that's not selling this year. You can move in and out of Bitcoin really quickly. And that's a very important thing for money is not just having your investment, but is it on paper or can you put it into hard assets?
Yeah, definitely. And now Hong Kong is launching ETFs for Bitcoin and other cryptos and stuff as well. So yeah, definitely. You could see this as a play, something that's kind of going to boost the markets over time. Um, but at the same time, you can also see that like it's a crisis situation. So what do people do in crisis? Do they buy Bitcoin? I mean, maybe some rich people do, but does it happen en
Oh,
masse? I don't know.
you hold your money, but as soon as the Chinese government e- maybe prints, this is theoretical, prints money to satisfy debt holders who don't get the house, at least in certain circumstances. If Evergrande went down, you get the house, or a buying structure. So if they start receiving checks and amounts to pay to these bankrupt companies, theory, speculation, 20% of it comes back as keep people satisfied. What do you do with that new chunk of money? You're not buying
Yeah,
a
true.
piece of property in China.
Well, that's it. Yeah, it changes user. So kind of similar, you could maybe look at like what happened when America did it during COVID and whatever. What did retail do? You had crazy meme stocks, and you had like,
hmm
um,
Housing doubled.
but yeah, sure. But the other thing is, but in China that won't be happening.
Yeah,
So it's more
yeah,
like where the money go. And the question I think is it's more kind of like a symptom of um, disbelief in the system. Like if you're not investing in the stock market, you're not investing in housing. These are like considered great assets to invest in, and you're investing in meme stocks and crypto. You have a certain YOLO in you because you believe that the system has failed you, or is failing compared
yeah.
to your other opportunities. And so I think like that is, I don't know, possibility.
Well,
But
and it's
while all this is happening, BTFP is ending in America, and like regional banks are losing out. So you have countervailing force of liquidity in America potentially drying up really quickly in the short term, and then
okay. Hold on. We'll get to
like
BTFP in just a second. And that was a funny one they forced and then ended. But like you just said, for the U.S., what did people do? And it's a lot about sentiment. We'll get to some thoughts on sentiment feelings because that's what really is the market. But 2008 subprimes, you restructure how you give mortgages to sell more houses. That's what they did in the
mm,
US. The whole thing blew up. And they're basically doing those 5-year incentive deals. It almost sounds like an NFT or something, mint early for this price, later it goes up, and 2 weeks later, who's the founder? Where'd they go?
Mm-mm. Yeah, totally. Buy now, pay later, but you get the thing
Hmm.
later, which is the risk.
But just all of these from subprimes to this is ways to restructure who should have access to debt. It's rebalancing. If you've been reading, I can never remember his name. It's a really long name. The guy's been writing threads on SoFi, um,
Mm-mm.
and they're
Oh yeah,
fantastic. But it's all about how do you,
I'm a well, yeah.
I'm a Wally, yeah. Um, how do you structure debt? How do you get people to look at debt differently, balance the numbers, whether it's, you know, paying now, getting it later, paying a little bit over time, balloon payments over time. You play with debt to move ahead because you need to take the commission.
Mhm.
And
Yeah.
Evergrande plays with debt because they need to get the numbers. They need to sell these things to sell the next ones. There was no let's build a house, sell it to someone who can afford it and move on, because if you're the only one playing that game, you lose. If somebody else has an incentive advantage and a way to play with debt to get buyers, they win. But now we're not playing the housing market, you're playing the financial instruments market.
Yeah, I mean, this is why you have regulation. Essentially, everyone hates regulation, but if you don't have it, then you get casino-style things happening in all the markets, and the housing market's the worst one for it to happen in because that's a huge cost to everybody. And yeah, people just keep buying houses until they go up more. And yeah, if you're a housing developer, you must keep running on the treadmill, or you aren't taking advantage, which is what happened in subprime. Couldn't afford not to do what subprime was. So you go bankrupt if you didn't, and then when it went underwater, you go bankrupt if you did. So
Yeah, all the honest businesses got left behind. BTFP, buy the fucking pump. No, bank troubled asset. This is basically there's a lending window at a slightly higher rate for banks that were in trouble, but the Fed wouldn't say no. They wouldn't necessarily need to take assets in return to do repos or then reverse repos, which they've been reverse repoing for a couple of weeks. They announced this program would be mandatory because for a while, if banks used this window to take a loan, people viewed it as a risk. It was a bad thing. And they're trying to destigmatize it. So they destigmatize it. They make it, every bank's going to start taking these loans just, to make sure it works. And then 2 weeks later, like the program doesn't exist anymore. And there's a new program that's going to help. And then today, and I have not researched because this started happening this morning, New York community banks down 15, and then
30.
Yeah, I was gonna say that's 15, and then I went to the bathroom and I looked at my phone. It was down 30. It was like within 10 minutes, and it's 6:30 here on the West Coast in the U.S., so it's 9:30 in New York. Things are just opening. The BTFP was supposed to stop stuff like this. We went through it with the other banks. Don't worry, it's contained. It's a small problem. They even blamed it on crypto stuff. What's going on with banks this morning? Did we catch something from China and Hong Kong going down? And I got no info. I'm just curious.
Yeah, no, I mean, I think so. It's pretty complicated. I think like we're essentially, but essentially, the way it works is that for banks, they basically buy, debt. And what the long story short is, a lot of these banks, especially small community banks, have a lot of bad commercial debt that's not, making money. And so the problem is that if you do that, you have to go to the market and say, hey, can you buy some of us or some of this debt from us? And no one in the market is saying yes to that. So then the second option you can do is essentially, well, in the small bank's case, go bankrupt, or more before that, the step before that is what's called going to the discount window. And if you go to the discount window, you go and say, hey, look, this is how much we're actually worth versus how much we have outstanding. Can you give us backing to make sure we don't go under? And it's basically admitting that you're about to go under. And so if you do that,
and really quickly, the discount window is more expensive than the normal Fed rate. It's because you're not worthy of hitting the Fed rate. You're the
risk.
discount, not the actual price you pay.
Exactly. Yeah, you're a risky asset, and so doing that is kind of like suicide as a company, because going to the discount window is saying that you're in trouble, and so everyone tries to do whatever they can before they get into trouble, and so that kind of leads to a backlog of people who might be in trouble. So that's why they launched the BTFP, is kind of like a discount window, but not without any stigma, and so you can just kind of go to it. And so the idea, I think, is that they would sort out their problems in this intermediate period, but before they ended this thing. And so now they're ending it, and we'll see if they sorted it out. But they probably didn't. And so that's why bank stocks would be dropping now. And the question will be then, yeah, how do they respond? How bad is those kind of drops? Like, is it a Silicon Valley? Do you start to see some banks blowing up? And if so, what do they do? Do they put BTFP back, or do they cut
why
rates?
it's worse. Silicon Valley held a lot of T-bills. If you held them to maturity at their 1% rate, they were fine. Like, those assets were technically fine. Because rates were higher, when they had to sell the debt, you can't sell it dollar for dollar. But if they had settled the debt, it was dollar for dollar. The current problem in commercial real estate is you hold debt on other companies. So if the developer who's got three office buildings that they rent to different things, he's got your debt, and that company goes bankrupt, they don't pay it back. There's no backstop.
Exactly.
Like, at least when Silicon and Silvergate got bought up by, I can't remember who else kind of absorbed the risk and the assets, they got assets that will pay out dollar for dollar plus 1%. Not as good as $1 for dollar plus 5, but they didn't get a patch of land that nobody wants to develop on, because commercial and office real estate is just dropping. So it's like this whole backup assets all messed up.
Yeah, land would be a dream. It's more like office parks that you would inherit that need to be reconverted, or actually office buildings that can't be turned into apartments because there's not enough bathrooms, and the way that the whole plumbing is done, it wouldn't work. So,
and they're just valued
that are getting marked down 50%. Yeah, and then they're getting marked down 50%, and that's the big problem. And so it's ironic, that kind of where it brings you back to Evergrande. That's exactly what happened, right? Evergrande went under. All these banks that were backing it are like, hold on, we're actually backed by huge amounts of Evergrande value, which is now 0 or 50% lower or whatever, at which point you look at it. And they're like, we need money to back us. BTFP comes into play. And so, yeah, a lot of things, like the commercial real estate market is going to be a huge problem for these banks. And I don't know how they're going to solve that, but we'll see. And then, yeah, we'll see what happens.
So to fix it, does crypto go up or down?
Yeah, I
right,
mean,
last time we had this issue, it was somewhat contained. There's only so many times you can keep containing it unless you want to start. I mean, the answer is always printing, and they don't want inflation.
Yeah, so in theory, like, they would start not doing QT as the first way to stop doing printing, or not printing, and then the second one is cutting rates. And so that's what could cause it. So you could be like, oh, everything's going to be fine, and all these regional banks have sorted it out somehow. I don't know, and it kind of just, like, a couple fail, but it just smooths into a situation where everything's fine, soft landing, so to speak. But probably more likely is, like, a bunch of things start going off a cliff, and they do something like cut rates and then announce a program where they're like BTFP, but maybe a different one, where it's like commercial real estate conversion fund, and they will buy those toxic assets at the new lower rate.
Which is exactly what they did in 2009 when they bought up all the crappy subprime mortgages from banks.
Exactly. And that is a way of doing it. And so, like, that will then, and that's the restart. But before that, you have a huge crash, and crypto is not immune to that. There's a lot of people like, oh yes, crypto would be like a hedge against crisis. In an actual kind of crisis situation where a bunch of stuff starts failing, dollar. That's where you go to the dollar. Everything else is a risk asset compared to the dollar, and that's what people would do. And Yeah, it might be interesting actually to see the results in the ETFs if that were to happen. Like how much of that ETF money is hard long hold, and how much will like sell for liquidity in that kind of event. We
So
might see soon.
let me tie this together because I want to talk ETFs and then if it's going down, because you had said you're probably were headed to 32 and took a trade, meaning you went to cash with some of your position and then you're going to buy back in. But you said the ETFs went well. Mostly, in my view, it's a flood of GBTC people gaining freedom and running away from that 1.5% fee. There's a T+2. So if they go in and out essentially as quick as possible to another one that has a 0.2 fee, which they're all at about 0.2 for the ETFs now, there's still catch up. So a ton of money has left the GBTC. Those outflows are slowing down. And you took this trade as a sell the news. That mixed with, I feel like yesterday or 2 days ago, as Bitcoin's up to 42, that's a hard thing. You have a conviction, and this question isn't so much about price, but you have a conviction that at this price it's going to go down and you'll re-enter it and then it will go up. And as it plays between your pull points and it goes up, it's a hard thing to sit through, and a lot of people react quickly and lose money in markets. Today's probably a good thing because if it wrecks it plays into your thesis. You can play your plan out. But how do you sit through a 4-week, 6-week, 8-week trade? Because you said March is the lows, and not just pull the trigger when it jumps up 3% all of a sudden. There's a Coinbase notification. Like, how do you stick to your thesis and chill?
Yeah, totally. It's the hardest thing. You don't chill, right? Like in your head, you're freaking out. It's all like crazy, whatever. But like, it just takes a lot of practice to be, and a different way of seeing the market, which I would kind of go back to and modify. The idea is not so much that the price will go to 32K. That's the hope. The idea is that the price currently is not showing. Sorry, the chart is not showing strength. And so if you do research in classical charting, the idea is that you only want to take a trade if it's a 3-to-1 odds in your favor. And the odds right now are 50-50. Like it could go up, could go down. Nobody really knows.
Mm-hmm.
And so the question then becomes like, why do you want to be in the market? It's because you're afraid that it might go to the moon and you might miss it, right? But does Bitcoin ever really go like at these stages, 10K, 20K in a day? You have the chance to get back in. And so if your thesis is wrong, you just get back in when it proves itself at like 46K and holding for a day or so. And you miss out on, 3K or which is like 3 or 4% in gains, then you're back in the market. But you've defended yourself against a potential 30% downside. And if it comes, then because the thing is, it's when you buy, you're always like, oh yeah, fine, I'm in excited, and then immediately it switches to, oh shit, it just went down like $100, or it just went up 100, and then you're like, and when it goes down, you're like doubting, like, did I buy too early? Have I just bought the like? And so immediately, like your grass is greener situation is upon you, and so you just kind of have to remember that you're acting on what are you acting on? You're acting on your emotions. You're not actually acting on. And so the idea is over time, if you really do want to trade, you just have to hammer yourself into an emotionless state where you're trading probabilities, right? Where you're like, hey, look, it's a 50-50. I'm out. Oh, look, it looks like a 3-to-1. I'm in. Oh, it didn't work out. But 2 of the times out of the 3, or 3 other times out of the 4, it will. And so if you just kind of keep doing that emotionlessly over time, that's the way you can trade markets. But saying that is easier than doing it. And so, yeah, like sentiment wise, essentially the thing is you have to like follow people and have people you trust and believe in and are like affirming. And then if they say things that are opposite to what you believe, really start questioning yourself. Don't just like all in on an idea based on someone all in on your bias, basically.
Because once you've bought, and not you, people in general turn to defending that it must hit the number that I believe. And you're saying if people switch, and as long as you bought in lower, even $1 lower than you sold, it's not a bad trade. You can't screw it up insisting on getting a huge trade every time.
Yeah, exactly. It's about minimizing your losses as well, because so interesting thing people never really think about is like, if you go down 50%, it takes 100% gain again to get back to where you were, right? It's not proportional. So losing money is more painful than gaining. And so like if a coin goes down like 95%, you need something like 1900% gain to get back to where you were. And so falling in love with your notions is the danger. So let's go to GBTC for
falling in love or forgetting you bought a bag of Kyoto and going like, oh shit, that's in a wallet. Oh my gosh, that's not worth. It's worth $400 now.
Yeah, sure. But there's some coins that are really little. You just buy a bunch or like a very small bag, and then you just leave it and you let it go up and down like crazy, because it will. But when you're actually investing in trading in like bigger coins and you're actually looking at trying to trade markets, it's about trusting the market. So right now, for example, every single cycle so far, Bitcoin has had retraces of 30%, generally from where we are right now. Is this time different? Is the ETF being launched going to make this time different? I don't know. I don't think so, though, because if you think about it, the volumes of inflows and outflows on the ETF, despite everyone's like, that's as much as mine today or whatever, it's still only like $1 billion or maybe $2 billion or max, whatever. Like if you look at the leverage going on the exchanges like Bitfinex and Binance and all these others, is in like 36 billion. So like the price is not really being moved by this. The price is being moved by the market as usual. And so let's put it a different way. Like the fact that we're at 42 from 49, why are we down here if it's so bullish that that people just keep buying it and everyone, like, who's selling then, right? And so anyway, like these are just ways to kind of check your bias. But why is the ETF bullish? So like why did it go well? Because the ETF was never just going to be like, with anything, it was never just going to be like, oh sweet, ETF launch, let's go to the market price of gold 10x in like a week or whatever, right? It's a huge asset already, a big enough asset already. And if you look at the gold ETF, it actually went down for about 4 or 5 months before it started going up. Nobody really zooms in a lot to look at that part. But in either case, like the ETF has onboarded billions of dollars, most successful ETF launch in history. The price is maintaining relatively well in these early days of the ETF. Flows continue to come in and out, like GBTC flow, like you're saying, is going back in, not just being sold off. There are new people coming in as well. So some is being sold off and some is being new money coming into these new ETFs. So the flow is massive compared to other ETFs. And, it's a success. It's great. It adds another, I would argue that like the better way to think about the ETF launch is it adds another factor of growth to Bitcoin's possible end price. Not so much that it will immediately jump the price now, but the fact that there is this channel for people to now buy it as the FOMO starts taking off, well, everybody can now buy it in their own way, rather than, if you hear about it at Thanksgiving, you can jump onto your Fidelity account and buy some, rather than be like, what? I have to sign up for Coinbase? My nephew's not here to tell me about it and show me. Screw it.
You don't even sign. You do it over the phone. You talk to your broker. I know that sounds crazy, but a lot of people I know people who still sit down and chat with their financial advisor, and I keep waiting for them to be like, so did your financial guy mention Bitcoin yet? And some of them have.
Yeah, totally. And so, yeah, I mean, in my opinion, there's two options that Bitcoin, based on what people that I trust say as well, is that Bitcoin either from here goes on a relatively quick dip over the next couple of weeks down to like maybe 32, 34, 36, something in there. And then starts to come back up again, and off we go. Or it because of liquidity from China, because of the ETF, who knows? It chops sideways between 40 and 45, 6 for another couple months through the halving, and then moves. But does it just go from here? Is it because like people are like, oh yes, well now GPTC is not selling as much Bitcoin anymore, and the flows to other ETFs are just the same. So therefore, it must mean the price is immediately going to go up. And again, you're not like looking at any of the futures and shorting markets and like the future volume being traded over here. That is
ETF launched everyone was long, and you're like, well, that's not how a market works. And of course, it has to crash a bit. Like you can't have everybody be long at 100% funding. Is it something like 100% funding rate too?
Yeah, I mean, I wonder if you're like a gold bug back in the day and like knew that it went down for 6 months first. Will be like what it's like to be a Bitcoin guy in the future, where you're like, oh yeah, look, it just went straight up after the ETF. It's like, actually, there was this period where people thought it had failed and it was dead. In March, people were like, haha, the ETF had failed, and it was at 32 and everyone was bearish. And then it went to 300. But that's just how it works.
Yeah, so mostly listen to other people, but then be sure to you can't get indoctrinated. You got to be able to change your bias and
listen to the right people. I think
listen to the right. That's accept the input to change your bias, and then it's not easy or calm. It's a nightmare along the ride.
Yeah, exactly. That old meme where you're not just start and finish line. There you go. Yay. It's, a whole bunch of crazy emotions along the way. So yeah, generally speaking, unless you have a lot of time and have been in the market a long time, like I have, don't trade basically, because you probably don't have the time it takes to devote to do this.
Yeah,
no joke. I've probably like studied crypto 4 hours a day for the last 6 years.
Yeah,
because I'm a fanatic. Unless you can, and it's taken me that long to become a profitable trader. Like just to test yourself, right? Like, so invest a small bit, and then over the course of 2 months, see if you beat Bitcoin. And if you didn't, and if you end up with less Bitcoin than you would have, you're not a good trader. Don't do it. Just hold.
Exactly. If it goes up 10x, a lot of people manage to lose money over that time. You could have just done nothing. And of course, when I say 10x, I mean buy late, sell early, take the 5x, and go home.
Yeah, and don't believe that just because it can be done or has been done by very few, that new few is you. I've been here 6 years. It hasn't been me so far, so it probably isn't you.
And as far as you're saying, it's an emotional game, because I trade far less, and I know how my emotions hit me, and just sometimes, even when I control them, the stress of being in things and how you want to live day to day. Yes, I understand how to trade. No, I'm not sure that I could actually sustain that with sanity. So I don't, because there is that whole side of, like you said, controlling yourself, the bumps going up, that hits you more. Can your logical thoughts like override your emotions, but also update themselves in a logical way without your emotions? Is such a tough thing, because you make a lot of hypothetical choices in life, but when you're making them with money behind you and this idea of where it could go in life, it really, people haven't made those decisions in those kind of moments, and it really gets your heart going.
Yeah, absolutely. First of all, like you have to choose your trading style if you're going to trade. I don't trade on any leverage. I think that's, to me, too stressful, and also I don't that's not a way to do it for me. And then even then day trading I don't really do. It's more swing trading over longer periods of time, so you have to kind of pick where your stress level can handle. But yeah, exactly, that's the untalked about hidden aspect of trading that nobody really thinks about. You just see the outcomes of it, but along the way, it's a mental game. It's all about mental game. Like you have to babysit certain trades at certain times. You have to kind of really understand what the chart is showing you versus what your emotion wants you to think is showing. Like right now, like, oh, Bitcoin's like 3K off of, its breakout zone. It might go higher. I should really not miss out on the chance of being in, but being out is the smart choice. And so, yeah, that's basically the hard part of it. And so nobody really thinks about that it's actually work, that it takes a mental toll. And I probably wouldn't recommend it for that reason, because you're playing high wire.
Yeah.
You're basically trying to be a professional poker player. It takes a lot of work. It's pretty boring for long periods.
90% of people
sometimes you lose. Definitely. Yep.
Yeah.
Yeah.
And then if you do, and you're like, hey, Twitter, I made it, everyone shits on you.
Definitely. Definitely don't talk about it either. That's the smart thing to do, because that's just adding lots of variables to your bias, because everyone else is going to have a different opinion on what you're doing and why you're doing it, et cetera, and so forth. So talk to some people about it, obviously, but like, definitely don't be like on Twitter telling people about your trades and what's going on, because it's all just messy when you need it to be as clean as possible.
Yes.
But yeah.
That's a perfect way to end it right there. No, I think your financial advice is trading's really hard. Probably don't do it, which is pretty solid advice.
Yeah, exactly. For sure. I mean, crypto is naturally a leveraged asset, so you don't need to use leverage. Crypto naturally goes through cycles where it goes up and then down, but then on the cycle of usually going up. So if you just buy it and hold it, you'll do pretty well. In fact, you'll probably, compared to a lot of things, you'll do very well. Just don't let your mind play with you too much, and just go do something else while you're doing well. It's just the messing with it that will screw you over in the end, unless you really know what you're doing and you've done a lot of research, like obsessive research, like not just a little bit of watch a couple of YouTube videos that make you feel good. Watch the ones that make you feel really bad, that are boring, and they're super confusing. You're like, oh my God, how do I even get and understand that this is a bull trap rather than a bear trap, and what does this candle mean, and why all that stuff. That's what you need to do. Otherwise, don't do it.
Yeah, like you said, it's supposed to be nice and clean with the logic, and it's always messy.
Yeah, so it's an emotions game. Trading in the market, as Buffett said, is from moving money from the impatient to the patient. It's very true.
Perfect place to end it. Been a great conversation. We'll be back in 2 weeks, maybe.
Yeah, it'll be a good time to start looking at buying the bottom, hopefully.
Interesting call. Okay, you're sticking with your thesis. I continue to have very few theses, except for hold.
Sweet. Bullish.
What's this called?
Yeah, cheers, dude.
Yeah. 5, 4, 3.
Catch us in.